This is the Lone Crater YouTube. We hope this video helps.
You start by confirming your entry and the direction. Enter only when your signal aligns. Next, locate a logical stop based on structure, support for longs, resistance for shorts, or a volatility buffer like 1.5 times adder. Then calculate your allowable risk. Choose a dollar amount or percentage of your account so losses remain acceptable. Once done, convert that risk into a stop distance in points or price. Make sure your stop is not inside normal market noise. You then compute position size precisely. Divide your dollar risk by the distance between entry and stop to get quantity. After calculating, enter the trade with a limit or market order and attach the stop-loss order immediately. That prevents emotional delays. Decide on stop type: fixed if structure is clear, trailing to lock profits, or time-based if you expect short-term swings. Once placed, confirm order status on the platform. Make sure the stop price and quantity match your calculations. You monitor the trade and avoid moving the stop unless price shows a true structural break. You protect capital by letting your plan work. If the stop fills unexpectedly, pause and check platform fills, slippage order type, and any market halts to troubleshoot what happened. Reassess whether to re-enter with adjusted size or skip it. Once you close, log the outcome and update your rules. One tip: set alerts for when price approaches the stop so you can review context before reacting.
Thanks for watching. Consider subscribing if we helped you.